And welcome. This is Mary Ellen McGonigal with your MEM Edge show, brought to you each and every week. This is the show where we bring you where the action is in the broader markets. As always, lots to review here as we dig in, take a look at what took place last week in the markets. So to begin, as usual, we're going to take a look at the S&P 500, see where did we close the week. All of this is with an eye toward helping prepare you not only for next week, but beyond. We want to have that big oversight relating to the markets as well as individual areas within the markets. So we are going to take a look at some of those top headline news that drove price action this week. Pretty damaging week out there, but we'll take a look at what took place beneath that as well. Also, there are some bright spots amid this rather dismal market. I'll share those with you and also share why. I'm that curious cat that wants to know why, but more importantly, want to know, is there potential longevity in the moves into some of these areas that are bucking the overall downtrend. Also, we'll take a look at recession stocks amid global growth fears. This is something that I have done in the past. It definitely bears a closer look because that is one of the areas we're going to take a look at the names that were able to not only outperform that 2008 recession, but also had gains that put them in the top 10 performance-wise. Some of those names are coming to life this week. So we'll take a look. Also, here we are with those headline news. S&P 500 is at a key level of support. We'll get more into that as we move forward. Earlier this week, a huge bucket of cold water put onto the markets as core CPI, that's the Consumer Price Index, for August posted a number that was double what was expected. And many of you know this is a key data metric for the Federal Reserve and guiding them forward as it relates to their monetary policy, their rise in interest rates, and certainly the markets were rallying going into that report, anticipating better news. Not the case. So we'll get into that. Also, next week, very critical, we will receive the the Federal Reserve decision relating to their rate hike. We definitely will be seeing one. It's a case of, will it be 0.75%? There is a small percent of individuals and investors that are actually anticipating 1%, but certainly the news will be highly relevant next week. This week, producer prices, this is another inflationary metrics similar to the CPI, but not quite as impactful as it relates to the Fed's, what they look at, Federal Reserve, very closely. But it did fall in August, which was seemingly good news on the surface, but the core PPI rate was higher. So in the end, it was not good news relating to inflation. And then July retail sales were revised lower, and consumer sentiment, we're not seeing it here, but it was released today, and the numbers were up a little, but rather myopic. Investors are still very fearful of what may be coming forward as it relates to higher interest rates, high inflation, and so forth. So let's go ahead and jump right into these charts. Take a look at where we closed the week. Here we are with that S&P 500 index. And I am going to go ahead and refresh this because this is a chart that I had marked up prior to the close. And with a drum roll, it's all about how we end the week. This 3,900 level is very key. It's a level that takes us back to mid-May as a support area. And it is something that technicians and really investors are paying very close attention to. So where did we close? With the S&P and really with any stock, you can go ahead up here on stockcharts.com and take a look at where the high, the low on a given day, and where we closed. So we did close the S&P at 3,873, so just below that 3,900 level. So whether we are dipping below it and whether that is going to have a big impact or not remains to be seen going into next week. But technically, we did break below key support. This is following earlier in the week with that Tuesday CPI number. We did get that break back below that 50 day simple moving average. That was that first area of potential support. A break below 3,900 brings us to the mid-July area as that next area of support. Now, when you're looking at support and resistance, you're also going to want to take into account other factors as it relates to breadth in the markets, volatility, and so forth. So we will get into all of that as we move forward here. But technically, we did break below that 3,900 level into the close. Let's take a look at some of the underlying sectors in the S&P 500. We do have the 11 sectors listed here. I've added an RSI, and it is sorted now in descending order. This is a 2-month daily price chart view. And as always, we want to uncover where the relative strength is. We can see that the overall markets are weak, but there are some areas that are withstanding, not with any great force, but they are going to be these industry groups up here in this left quartile relative to your weaker areas down here in the lower right. And of course, we do need to pay attention to this middling area because in addition to pure relative strength versus weakness, you want to pay attention to rotation. Are there areas that are progressing from this left side of strength down into weaker, or from this right up into the stronger area? And yes, in fact, there are. This week, I will share with you XLF. The industry group was down less than the broader markets this week. It's not a great looking chart by any means, but we did have a very striking 4-day rally going into the beginning of this week. And of course, it has suffered. The momentum indicators are negative, but relatively, it is beginning to see daylight. I will share with you areas there. Also, energy up here in the forefront. We did close the week down about 2.5%. But today on this daily, actually, we're not that bad. We're down 2%. So it was down quite a bit more. We'll get into what's taking place in that area, as well as making sure you're aware of these weaker areas. Technology has been down in this lower right quartile. We're on to week 4 with weakness in the technology space. Of course, I will share with you those areas that are pushing this tech sector lower, and we will talk about what's taking place there. But overall, these higher growth areas are suffering. One other area that I did want to point out to you up here in the upper quartile, actually 2 areas, the healthcare and utilities, both are viewed as defensive areas, but there are other underlying reasons why they are holding up. Here we are with XLV. Again, not a great looking chart by any means, but it was the top performer in the sense that it was down less than certainly the broader markets, down about 2.5%. And you can see buyers coming in on the dip. We'll get a little bit more into that as to where the strength is in that area. And then likewise here with utilities up here, also down less than the broader markets, a little bit steeper in the way of a decline. But some of the reasons for the strength here is the ability for these companies to increase their pricing and certainly retain. We all need to have our electricity and water and so forth. So, but the ability to increase rates and sustain any kind of growth. From here, let's go ahead and take a look at some more in the way of underlying areas. I put together a list of ETFs that are highly relevant as it relates to the markets, as getting your arms around strength versus weakness. So as we progress through these ETFs, you'll see what I am suggesting here. First up on this stronger area, this has been here in the forefront and still remains. That is a daily price chart of the yield on the 10-year Treasury. This is all about the anticipation of increased interest rates by the Federal Reserve. They are looking to bring inflation down to 2%. It currently is at 8.5. So they do have their work cut out. So here we are with that 10-year just on the cusp of 3.5. It's at about 3.45. So that 3.5 is a very widely watched metric. It would take us back to the highs back here in early June. The relevance here is as interest rates rise, growth stocks suffer, and it's all about their future growth prospects being diminished because of that higher interest rate environment. Also up here, and it has been for a few weeks at least, is the US dollar. I'm using UP ETF to cite that, and we can see that the US dollar, it actually ended the week up almost 1%. And the impact here with that rising dollar is twofold. Oftentimes you will see commodities decline, and also some of these multinational companies may see their sales decline if they do have a lot of revenues coming from overseas with that higher dollar. Also up here at the forefront, and unfortunately for the last 2 weeks now, it has been, this is the volatility index, or VIX. So we did close the week at about 26, but more importantly, as it relates to this chart, is volatility is above this 200-day simple moving average, another widely watched view with volatility relative to that 200-day. And so we can see the fear is there, but we didn't really get a lot in the way of spiking. It's just a general sense that the fear is certainly out there as volatility remains, this VIX above 26, in a more upward trending bullish phase. That VIX will generally reside around this 16 to 18 level. So it is elevated. Let's go ahead, get back to our list and take a look. I talked about financials sneaking into the upper quartile with those sector ETFs, and this is one of the reasons. KRE, this is a regional banking ETF, and not the sharpest looking chart, but certainly relative to what we've been viewing. It is clinging here to this 50-day, just below that 50-day moving average. I'm going to share with you a number of names in this area. Banks are the first group to begin reporting their earnings. We're still a good 3 weeks away, but we are starting to see firming up among some of these beaten down bank stocks that normally fare well in a rising interest rate environment. Let's take a look at an area that really got clobbered this week, and that is the Dow Jones Transportation Index. There's been certainly fears, or there has been talk of a rail strike, but today's drop is all about a significant fall in FedEx. We'll get into that because earnings season, we did get some numbers this week, and it could be foretelling as it relates to our upcoming earnings season. Not very pretty. Let's take a look at the price of oil. It was down this week. We're at that $90 level. That is certainly of concern, but we talked about that rising dollar, and then also recession fears are bubbling up, meaning that potentially oil demand may decrease. From here, we can take a look at some of these other technology subgroupings that really took it on the chin. This is software. IGV is the ticker symbol, and this particular group was down over 8.5%. There's one bellwether name that came out with news this week that helped drive. The group already was in a downtrend before that news. We'll get into that. Semiconductors still continuing to suffer, and this is not what you want to see. There's that adage that says, as semiconductors go, so too does the market. And it's all about the need for these semiconductor chips and equipment in any number of products throughout the economy. So if there is demand, weak demand for these semiconductor products, it is implying a weak system throughout as it relates to the economy. So I believe that's it for this view, but from here, I do want to go ahead and dig in and share with you some of the more impactful price movements, news that took place last week. Again, just sharing with you so that you can have a very good sense of not only how we ended the week, but what could potentially drive stocks going forward. So first up here, I'm going to share with you a stock that did fare well this week. I'll explain why. This is Humana. HUM is the ticker symbol, and you can see it had this big downtrend reversal on Thursday and then a continuation rally on Friday. The reason is the company did come out on Thursday and they guided their fiscal year 2022 outlook quite a bit higher. They have found that medical costs have declined, but more importantly, they are at a juncture where they are able to bypass and no longer put negative COVID impact into their future growth. So that turned out to spread into some of these other stocks in this area, including insurance. We'll get into that. But that is one name that I did want to share with you. And then another stock that actually was very negatively impacted, and you may have read about it. This is today. Adobe actually yesterday was their big gap down, and then a continuation negative day today as well. Interestingly, Adobe did report earnings and sales that were ahead of estimates. However, they announced an acquisition, and investors felt that they were paying a much too high multiple. In response, the stock suffered, and then there was other widespread deterioration among some of these other software stocks that had already been in a downtrend. Let's take a look at a bright spot, another one in the markets. I'll explain why. This is an example. Let's see if I can get that ticker symbol correct. It's LTHM, and I'm sharing with you Livent Corp. This company is a primary provider of lithium, and it's holding in really quite well. I did want to share with you the fact that lithium prices hit a record high last week. This is all about the electrification of vehicles, and lithium, of course, is a key component to that. From here, we can take a look at another name that is also a lithium provider, SGML, a nice pullback to this upward trending 10-day simple moving average, and the momentum indicators are constructive. So that was another area that I wanted to share with you. Also, taking a look at some of those recession-related stocks. So let's go ahead and take a look at some names that were top performers in that 08 recession that are really looking quite attractive at this juncture, and all about being relative to the broader markets as well. So first up is Vertex, VRTX. This is one of two biotech stocks that really not only held in but outperformed, were top performers in the S&P in 08. So here we are with Vertex. Their primary source of very strong revenue is their cystic fibrosis drug that is being highly championed. We can see the stock has broken back above each of these moving averages in an otherwise, as I've shown, dismal market. Your momentum is trending upward, and then we can see your MACD is poised to turn positive. Another stock from that era in 08 that is also holding in relatively well. It's not a great looking chart, but this is Dollar Tree, DLTR. You can see that it's coming out of this oversold. The company reported weak earnings back here at the end of August. It's in the process of continuing to try and recover from that. So we will keep an eye on that. But there are other retailers, certainly discount names, that are in the throes of, at the very least, holding firm and not deteriorating. So that's another kind of interesting phenomenon that is taking place. I'm going to share with you another biotech stock. We talked about Vertex. Let's take a look at REGN. Really a unique looking chart in this market. This company had this huge gap up due to very positive clinical studies on one of their medications, their eye medications, and Wall Street is championing this particular name, lots in the way of upgrades. And you can see this is last week. We did have that rally last week. I would call it a short squeeze rally, but nonetheless. And in this case, REGN had this huge gap up, continuation rally up here to 750. The interesting thing to me is the stock is not closing this gap. It is holding in a very difficult market environment. At this time, I am not putting new money to work, but this is the kind of chart that is always going to be of interest to me. If you were a more of a faster moving, maybe an intraday type of a trader. Here we are with a 15-minute price chart. I'm going to take us to 1 hour. That 15-minute for my work or taste is a little bit too refined, if I may. But here we are with this REGN. Here's that gap up, pulled back very orderly, but take a look. The momentum, this MACD remained up here in positive territory, throughout this pullback period. And then on Thursday, we did get a move back above this 5 and 13-hour moving average, and it's holding in quite well. So interestingly, if we do get any kind of a rally, this would be a type of name that I would keep an eye on. We talked about healthcare elsewhere. Let's take a look at some of these other names that have been also holding in well. This is Boston Scientific, and you can see it pulled back with the markets, but it's finding support here at this 200-day simple moving average. We can take a look at one other name here. And actually, unfortunately, today it did close the day below this 50-day simple moving average on big volume. So hence, my interest is no longer there for that particular name. But we can look at ABBV, that's AbbVie. The stock is very much in the throes of reversing this downtrend trend. It closed today above this 200-day simple moving average, but take a look at this huge volume, very encouraging RSI trending upward, and we can see this MACD almost in positive territory. What I've found through my hours of screening, which I absolutely love to do, is that some of these higher yielding stocks are definitely finding traction. So from here, I'm going to go ahead and share with you some of these more vibrant bank stocks. I shared with you KRE, that ETF. So from here, and I will tell you that a lot of these names are smaller, but they certainly are looking interesting. Here we are with WesBanco, WSBC. I'm going to go ahead and pull up this full quote so that we can then get more information relative to the market cap and the yield. So this is a $2 billion company, but they do offer a 3.8% yield, breaking out of this base on big volume. A couple of other names here that we'll go ahead and take a quick look at. This is WSFS Financial. Nice orderly pullback with the markets to this 50-day, but it is in the throes of reversing, and we're now above each of these key moving averages. A nice MACD crossover would be quite constructive for this particular name. The stock has a 1.2% yield, but it is in line with this select area of these smaller bank stocks that are faring quite well. This is Cullen Frost Bankers, CFR, a nice 2.5, actually, 2.3% yield in a nice confirmed uptrend. So all of this is very interesting. I did share with you too that insurance stocks selectively are on the rise. This is Allstate, ALL. And they do have a 3.4% yield, but that's not the only reason the stock has rallied this week. Again, nice volume characteristics, nice momentum shift here. The company announced that they are going to be increasing pretty substantially their auto insurance rates, and that always gets investors keen on that. One other area, actually a couple of other names that I can share with you here in this banking space, and Trustmark Bank, TRST, not quite as interesting, but it does have a 4% yield. TRMK is another one, a little more advanced, certainly very similar in its pattern where it pulled back with the markets and is reversing, like the fact that it had this ability to have a very nice lengthy uptrend taking place. So if we could see that black line come up through the red, that would be very encouraging for this particular stock. So from here, I did want to share with you some other rather impactful items that took place this week, because I talked about companies that increased their pricing that fared well. But let's take a look at a company that announced restructuring, and then I'll share with you other companies that have done so. By that, they are cutting their employment force. They are making other capital expenditure cuts. So here we are with Twilio. Not a great looking chart, but I want to put up a weekly here. Okay, so it was up 2.4%. It did have a more pronounced rally on the news yesterday. And from here, I did want to share, we've heard from other companies that have pulled back. They have reduced their staff. And initially, you will see a rally. This is Snap. They came out, this is last week, with very similar news, had a nice downtrend reversal attempt above this red 50-day, but very much pulled back since then. It was down 5% this week, and today, down 10% for the week. So if you see that restructuring rally, oftentimes it does not last that long. Other companies that came out with earnings of note that faltered, here we are with Oracle, ORCL. You can see this big drop, definitely a stock that is under distribution. So you will want to be aware of that as it relates to other software stocks. Here's a smaller software name that came out with earnings this week as well, and they gapped down almost 20% on the week. And this is on the heels of Adobe. I mentioned that particular stock to you as well. One last name that we can take a look at here that came out with numbers today that has been in the past rather impactful because of their line of business and how it can really be telling in other fields. So here we are with FedEx, FDX. The stock dropped 21.5% today, and they came out with numbers that were not only below estimates, but the management had very dire outlook for growth going forward. And so, of course, this is all about a lack of demand to move products. And going forward, they were citing that really a weakness in Asia, and then also service challenges in Europe that they anticipate will not dissipate anytime soon. So as FedEx goes, oftentimes you will see other stocks, and we did see certainly a deterioration in the broader markets that was even more enhanced by this drop in FedEx. The FANG stocks had a horrible week. All of that I'm going to review in my Sunday MEM Edge report, my twice weekly report. I'm also going to talk about what to be on the lookout for as it relates to these markets, have benchmark for you so that you can really navigate what's taking place. So be sure and use that link below, and you can experience a 4-week trial at a nominal fee. Last up, I am going to be at ChartCon. That is a conference that stockcharts.com is putting on. It will take place October 7th and 8th, so you don't want to miss that. There is a link below for that as well. Have a great weekend, everyone. I'm going to see you here next Friday.